This is Frontier Opening Bell. I'm Temple Ashadu. Welcome to the program. We've got Ali Kansachu joining us today again from Nairobi, Kenya. Ali, welcome to the program. Bosana Mofaye, our editor here at Frontier Africa Reports, welcome again to the show this morning. Let's check in with the markets where Nigeria yesterday closed negative again, 1.66%. The BRVM stock exchange was positive by some 13 basis points. EGX, which is the Egyptian stock exchange at 9,000 psychological position now, was down by 42 basis points. That's a decline from the 10,000 line we have always seen it at. The Nairobi Securities Exchange was positive, up some 0.25%, while the Johannesburg Stock Exchange closed southwards by 0.93%. Let's look at the Eastern African headlines. You have Uganda sugar export earnings rising by almost 40%, all the way to 45.9 billion shillings in April alone. Uganda insurance sector posts 9.34% growth in 2020. And in Ethiopia, that country is inviting foreign investors for 40% stake in Ethiotel. Kenya business raising to declare beneficial owners before July deadline. Tanzania President Suluhu Hassan tells financial chiefs to brace up, to prepare for cryptocurrency adoption. This must be interesting headlines to you, Ali. Help us to understand what they mean for you.
Fascinating ones. Let me first start with Ethiopia, just to give people a bit of a macro background. You've got an election that's being held imminently. The Prime Minister's campaigning across the country. And obviously this is also a very big political event. With respect to the invitation, this will be the second telecoms action. The first action was the fresh licenses, where Safaricom, in a consortium with a number of other partners, received a fresh license without a mobile money component. Ethiotel, I think $600 million half-year earnings, state monopoly until now, I believe 53 million subscribers, and the government selling 40% to foreign investors, and apparently another 5% to local investors, so a total of 45%. Personally, I think this is the more attractive option. And the reason I think that is that they currently have a monopoly on mobile money. And as we all know, mobile money is the most profitable component these days of the telecom franchise. I believe Orange is in the lead in this particular application for 40%. I think there will have been some pullback because of the political issues which have been swirling. So I think it's a tremendous opportunity for somebody to pick up a very squarely priced asset. And I, for one, if I was advising Safaricom, I would have frankly told them to go for this license, because they could have controlled the clock speed around when the new mobile money licenses were being issued, and effectively put themselves in pole position. So it'll be very interesting to see the number that comes out for this business. It does carry a little bit of debt, about $1 billion, but you know, the scheme of things, if you get this business onto its feet and motoring, you know, that's small change. So it'll be very interesting to watch. It's a big deal. The other headline that caught my attention, and I'm sure it caught Burson's as well, was this Tanzanian president who's very, very smart, I must say. You know, when she came and spoke in Parliament in Kenya, she used the example of, she said, you know, women are like tea bags. You don't know what they're about until you put them in hot water. And she's extremely smart. I've got to say, I'm terribly impressed. I really am. I think, well, one, I think she turned the page so effectively after all the drama we had with Magufuli. I think she's excited investors. I think she's excited the country. And look, she's showing us that she can think and get ahead of the curve. if you're a leader or a policymaker and you're not thinking about crypto, which has a total combined valuation of up to $2 trillion, then you're sleeping on the job. And I think what she's telling her people is have a think. Tell me, come back, come with a plan, as opposed to just closing her ears and her eyes and saying it doesn't exist. So, full marks to her. And I really think Tanzania is going to attract a lot of FDI. We're all going to be taken aback by what happens over there. Huge potential. She's making some good moves. I like what she's saying, and her signaling. Look at how all these crypto folks are banging the door down in El Salvador. They'll be banging the door down in Tanzania just in tourism. And quickly, just to go through the other headlines, Uganda sugar export earnings, that's pretty good. That's a good number. Uganda, big agri economy, typically does well. But interestingly, the biggest export currently is gold. And the insurance business we spoke about yesterday, Temple, 9.34% growth. I think insurance is in a sweet spot. There's so much demand.
Oh, great. We lost your connection toward the end of your comments there, actually, Ali. But let's leave it there. Let's move on. Bosin, you certainly have one or two things to say about the Tanzania story there.
Well, I think the Tanzanian story was what Ali was talking about earlier in terms of how this wind of change seemed to be sweeping across the continent, with Ghana, with Nigeria, central bank talking about a crypto digital currency issuance between now and the end of the year. And then the South Africans authority says they're going to do their regulations, and this was last week. They'll do the regulations of the crypto in a phased manner. In a manner of speaking, they've gotten seriously bumped in South Africa as far as crypto and all that was concerned. So they've learned some very hard lessons, and I think when they're coming forward, I think keep an eye on South Africa. I'm sure they will be able to be one of those ahead of the curve, having seen the whole massive mess with the MIT or MTI, which happened a couple of months ago. So let's keep that in mind. But I think right now we have quite a whole lot on our table to cover this morning, including the U.S. Federal Reserve meeting. So the oil prices is jumping. Some folks are forecasting $100 a barrel. I'm sure Ali will be happy to have $100 a barrel in Nigeria. So that's quite a whole lot here, Temple.
Thank you very much, Bosin. And we've got Uche Minis joining us as well from Lagos. Uche, it's really good to have you on the show this morning. Thank you so much for coming through. But let's now move on to the West African headlines, where MTN Nigeria warns of service disruption to Nigeria over insecurity. World Bank awaits National Assembly of Nigeria spending plans for approval or for approved $6 billion loan. The Africa Development Bank has just floated 600 million Australian dollars 5.5-year Kangaroo Bond. Nigeria's inflation rate dips further to 17.9% in the month of May. ITFC signs a $250 million framework agreement for Gambia. And Ghana's inflation declined by 101 basis points to 7.5% year on year in the month of May. Boson, let's start with you, and then we'll cross over to Uchenna to talk to us about the FOMC meeting.
Yeah, the World Bank story came yesterday. We did a very lengthy interview yesterday evening. So I'm just going to summarize very quickly. The first story issue is that the World Bank was a little bit pleased with the central bank with the NAFEX introduction and try to harmonize exchange rate. There's still a whole lot of lots thing they want the central bank to do. They want the central bank to pull back on subsidized exchange rate or support credit for big and mid-sized multinationals, so that they can give room for the banks to take care of this of the credit space. The whole issue about inflation is still very sticky. 7 million people went into poverty in Nigeria last year, according to the latest report. They're worried that inflation will remain at the very top end of the double digit, thereabout for the rest of this year, the next 6 months. They were quite happy with the policy response last year as far as COVID-19 was concerned, but the report pointed out that the poor and vulnerable situation, folks in Nigeria got hit by COVID-19, will take some time to taper off. So I asked some specific questions. When can we lift 100 million people out of poverty? The answer, anytime Nigeria is ready. If you're ready tomorrow, you can do it. If you're ready today, if you're ready yesterday, you can do it. So it's all about Nigeria. When is Nigeria getting any funding from the World Bank? And the answer was simple. we approved, according to the World Bank Country Director for Nigeria, Shubham Chatpuri, $6 billion have been approved by the Executive Board of the IMF for Nigeria, but the National Assembly is yet to present to the World Bank the spending plans for this $6 billion. You know, to put it very simply, the World Bank is not going to give a dime of this $6 billion to Nigeria, which had been approved for months now, unless the National Assembly step forward with a cogent plan, an actionable plan of how to spend this $6 billion US. So the money is sitting down there with the World Bank, and they said they're not going to give it out until they have the spending plans from the National Bank, from the National Assembly. So I think the next phase is for us to start asking the National Assembly, where is the spending plans for this $6 billion with the World Bank? When are we getting it? There was also a suggestion for the establishment of a fiscal and monetary policy coordinating council to consist of MDA, top MDAs, whatever, so that there can be a coordination, a better coordination of policy response, our policies and actions on the fiscal side and on the monetary side, so that the central bank is on the same page with the Ministry of Finance and everybody else in the room. That council, they want it to be established like yesterday. So there's a whole lot of shopping lists in terms of immediate priorities for Nigeria, as well as the policy response that will take Nigeria strongly forward. But right now, if growth is still very soft, 1.8% was the latest World Bank projection for growth for this year. If oil prices in any way tumbled and things don't go well with insecurity, the projection yesterday was that we could run down to 1.1%, to put it very mildly. Then you find the MTN story coming through as the first story from MTN, saying that according to Reuters report, which we got late yesterday evening, that insecurity in Nigeria will start to affect the operations in the coming days, not weeks, not months, days. In other words, MTN says last night in that Reuters report, which was a notice to some of their customers, that because of insecurity, their service agents, their technical team of MTN may not be able to reach certain locations. If there's a disruption in a cell tower or whatever facility, they may not be able to get there on time. So they're warning everyone, sorry, don't blame us. If we can't get there on time because of insecurity, you may have to have so far long delay in telecommunication services. And that will also go for those who are using MTN data as well. I think that's one bad news we got yesterday. MTN is the first company in Nigeria to formally come out and say insecurity is going to hit us and hit us very bad, or it's been hitting us. Now it's going to hit you customers. And that's one bad news we got yesterday. Thank you.
Thank you very much, Bosin. Let's piggyback to the oil comments that you made and have Uchenna speak to that. I mean, oil price at $74 to $75 per barrel at this point. Bosin hinted earlier, there are projections as well that it could touch $100. How true is this? And if you touch on that, would you also like to give us a rundown of what to expect from the Fed meeting of today?
Thank you, Temple. With oil, I think the microeconomics is just, or the market forces are just working in coordination, in accordance to make it even very significantly bullish. We can see economies are looking to really open up fully. You can see states in the US literally lifting up and having no other whatsoever restriction in terms of their COVID policy responses. Countries are also looking to do that too, as they are get to that point of significant level of full vaccination. So the comparison here is that we're coming from a place where the demand for oil was literally at the zero level, you know, given the lockdown and the pandemic, as a result of the pandemic, and we're getting to this point where economies and countries are having increased economic and business activity, and that's what we're seeing. The demand is really kicking on, and on the back of that, OPEC and OPEC Plus are looking to also work around some sort of level of increase in production, given the fact that they have been working around their production cut all through the time to manage the prices with oil. So that combination is basically what is giving that push in oil prices. Yes, it's possible we get 100. Really, it's very possible if the sentiments continue to pick on, because we are coming to a place whereby we are getting to that pre-COVID, pre-pandemic levels in terms of oil demand. So that's quite significant. It's quite possible that we can get that bullish sentiment run to the $100 $1 mark. And for the FOMC today, I think market participants and investors generally will see in terms of the vocabulary that's being put out today in this statement, and also the comment from the Federal Reserve. There was a lot of talk that they must start to taper in terms of their monetary policy setups at the moment, their accommodation at the moment, their quantitative easing really. But I think right now the Federal Reserve is caught between that rock and a hard place in terms of when exactly they will start to taper, because right now what is literally holding the economy is just free cash, or the money they've been printing. So the tapering in itself has to be very, very timed, like literally timed well enough. If not, it's like it's a domino effect. Let me put it that way. So there's the cascade effect whereby when one of these starts to fall, it just takes down a lot of these things. And again, you look at their level of employment now, it's quite, they still have about 7 million US citizens that are below, that are unemployed pre-COVID level. And they are getting to that point whereby they need to manage that. But also on the other side of things is the inflationary pressure they are looking to face right now. And that in itself, the argument is that this inflationary pressure is transitionary, but people have come to highlight, or the analysts have come to highlight, that this doesn't look transitionary, that this is literally here to stay. So it's that point where they need to now manage the inflation, given the fact that they've been aggressively printing for several months now, going to a year or so. And now you're now at the point whereby you also need to continue to sustain that business or economic activity within the year. So they are caught between those two. And I think people would need to watch out for the statement that has been said, but I'm pretty sure it's only just going to be that they are thinking of it, but not the effect in terms of tapering. We should be looking at another 2 years for an actual effect to taper. Tempo.
That's about the thing that has been projected.
Yeah, Tempo, just to touch on quickly, Tempo, because it looks like a very tough situation down there with the news coming through that JP Morgan, Citibank, and a few others are beginning to pile up cash because they expect inflation to come through. They're piling up a whole lot of the hoarding cash. This is coming through from Bloomberg. We spoke with some analysts on AP yesterday evening, and it's all coming through right now. Banks are not taking the situation that inflationary environment and higher food prices that are beginning to rev up in the United States very likely. So the banks are beginning to hoard cash right now. The big boys on Wall Street are beginning to pile up cash seriously just to prepare for any eventuality that might come true. That is quite an issue right now.
Thank you very much, Bosun. I'm sure there will be an addition from Ali.
Yes, Temple, thank you. Sorry about my connection. It's been pretty poor. So just to feed off what was being said, a number of things. You know, the question about inflation is, as these economies have opened up, the question is, you know, we've had these supply bottlenecks. How sustainable is this surge in inflation? If you look at higher frequency data in the last 2 months, we've seen significant moves lower in some commodity prices. Take copper as an example. Obviously, oil is clearly an exception. The 10-year bond, which tends to be a very interesting barometer for inflation expectations, is behaving extremely well. It's around, look, it's deep in negative yield territory, but it's around 1.5. And I think the biggest single challenge for the FOMC is unemployment. If you look at the unemployment numbers, they are frankly pathetic if you think of how much money has been printed. And then also they played with the numbers. So you've actually got more than 8 million people who are simply not appearing on the roll and not being counted. So as Uchenna said, I think it's a rock and a hard place. I don't see them changing the language dramatically. And I don't see them doing anything preemptive until they can see a significant upturn in the unemployment rates.
This is interesting. There is an analyst consensus here. Everyone is expecting the change to happen in 2023 and not just now at all, or even next year. Interesting. Thank you so much, gentlemen, for these comments on the FOMC, the Fed meeting outcome today. Moving on now to the other parts of the headlines that we have. South African markets headlines. South Africa's building industry confidence 39 points up in the second quarter from 27 points in the first quarter of the year. South Africa's agric business mood index jumps by to 75 in the second quarter as well. Serious Real Estate floats 300 million euros 5-year unsecured bond issue. In the Botswana Stock Exchange, Shumba Energy lists for over 493,000 new shares to settle $41,700 debt. Zimbabwe's overall crop output surge due to good rains. I mean, Ali, you know that we've been talking about the tobacco output in recent time in Zimbabwe, which has been rising, and it's really been attributed to rainfall in that region. Please talk us through this as well.
So let me just first say, you know, it's really, if you're going to look at Africa's economies, you've got to be a meteorologist, because the impact of good and bad rains is so vicious on the economy, on food prices, overall. So for what we're seeing right now is in the southern belt, which is Zimbabwe, South Africa, we're seeing pretty optimal rains. The agri-economies there are really outperforming, and that's why Mnangagwa, etc., and Mutili Cube have been so bullish, you know, saying, look, you know, I think Zimbabwe's crop is going to be a 30-year high in terms of production across the board. So, you know, this is really a sweet spot for those economies at a very difficult time. Eastern Africa, just to point it out, we're very concerned here. We're going to be parched, and we're going to have a drought, so that's going to hit us hard. And you know what happens when food prices go up, consumers don't have money in their pockets, and they're hit very hard, because the average African, of course, is spending about 50% or something like that on food. So it's really important. So I think Zimbabwe, you had all the bullish talk earlier. It's now coming to pass, and I think they're going to have a very strong year. How high that GDP can bounce, I think you're going to be in the high single digits, frankly. South Africa, look, you know, business confidence, industry confidence coming back, agri-business mood index jumping. But you did, you know, I was listening to Cyril Ramaphosa yesterday, who was speaking to the nation, and he's now introduced further lockdowns in South Africa because of the surge in cases. The one good thing is they've vaccinated most of their health workers. So they're saying, you know, the health worker side have not been that badly infected. But, you know, we've got a serious situation there. It's a little bit on a knife edge, and I'm sure they're hoping that they can maintain it at around these sorts of levels. But if you look at the graph, it's gone very exponential down there.
Many thanks, Ali. Bosin, one comment?
I like the Zimbabwe story again because of the food issue. You remember the ARC, the Africa Risk Capacity, intervened in Zimbabwe just about a year or two ago over the droughts that happened there, a couple of millions of dollars. And I think that that intervention must have been working right now for this crop output to start increasing. You resolve the food issue, then you can resolve a whole lot of things. Like I said earlier, in the US, the numbers are beginning to come up, by the way, and it's not going to look good, as folks say that after you have pestilences, the next thing is food inflation. Thank you.
Thank you so much. Northern African markets, where HD Bank profits improves 8% year-on-year to 651 million Egyptian pounds in the first quarter of this year. Faisal Bank profits surged by more than 19.6%. Ataka first quarter net profits is actually at 63.34 million Egyptian pounds. Analysts expect Bank Al Maghrib to hold rates at 1.5%, and Moroccan miner CMT has just issued a 250 million dirhams bond by PPO. Let me hear your thoughts quickly, Ali, and then we piggyback to you, Uchin, over how this whole global oil price increase will affect the local markets, which Nigeria specifically, where you are, or Africa at large. Ali first.
Let me just give a quick overview of what I think is of a worry in the Maghreb region. Look, they are typically the biggest food importers, whether it's Egypt, whether it's Algeria. That entire Northern African belt is highly dependent on food imports. If you look at the food prices of late, we're at 2011 highs. We know what happened in 2011. It toppled a whole bunch of governments. The cry was, you know, bread and all kinds of things. So I think, you know, my macro perspective is any further pressure on food prices from these levels, if we jump a little bit further, it's going to affect this entire belt very, very badly. And you know, it's easy to forget we've had a lot of political volatility. Think of Bouteflika. Okay, they had an election, the turnout was like 23%. I mean, you know, that's hardly an election in Algeria. You've got similar problems building. Libya has never stabilized since they toppled Gaddafi in 2011. Egypt, you know, this must be a concern for Al-Sisi, although they're very smart on their food buying. You know, they're ahead of the curve. They typically buy it in 6 months in advance, but keep an eye on that.
Thank you very much, Ali. Uchenna?
Yeah, so as a result of what you've just asked, yeah, I think on paper, theoretically, higher oil prices just gives us takes up the pressure of our government in terms of their oil sales revenue, and also a very significant source of FX. But it's double whammy for us, because the way we've set up, we sort of have created a counterproductive measure, you know, effect, as it were, given the fact that now we're trading at what the price is not of 490 really, if you want to be realistic with as exchange with naira to the dollar. And as a result of the fact that a lot of dependents are really a lot of corporates and also refined products have to be imported into the country using that same effect. So we're not exactly maximizing that increase in oil prices, because a significant chunk of this money have to now go outside to get for products into the country. So I in a way, yes, higher prices is okay, but when it gets too high, it becomes problematic for us, you know, except when we start to work in terms of having that internal infrastructure, trying to have our own refineries work at full capacity and sort of reduce our dependence on this on external products and produce, basically. So yeah, Temple, we're going to get to that point where when it gets too high, it becomes problematic for us. So that's it.
Thank you very much. Thanks a great deal, Uchenna. Bosin, your parting words before we finish up.
Yeah, thank you very much, Temple. I think the key issue around the food inflation that Ali was talking about, Egypt, according to Bloomberg News overnight, was that Egypt is suspending wheat importation in a manner of speaking. Egypt is the largest wheat importer because, again, a whole lot of inflation is coming through. There are a couple of problems. They're trying to get a hold of the entire story. But everyone just needs to keep an eye on one thing. Keep one eye on the COVID-19 pandemic. Keep the second eye on food inflation. I think that's.
Thank you very much. Thank you very much, gentlemen. Thanks a great deal for your perspectives and insights shared on the show this morning. Uchenna Minis, global management or global market strategist at, and of course, you are also a managing partner at Howard Minis Asset Management based in Lagos, Nigeria. Thanks a great deal for coming through. Ali Kansachu, founder of Rich Management Frontiers in Nairobi, Kenya. Thank you so much for your analysis. Bosin Omofaye, we appreciate your editorial on the show this morning. Thank you, gentlemen. This has been the show for our midweek edition. I'm Temple Ashaju. I'll see you next time. Bye for now.